Hi, this is Connor again. Today's topic, the US dollars. Has the dollar really appreciated more than it should be with higher interest rate? And what's next? And for today's tutorial, there are four key points here. Number one, we're going to discuss about why with higher interest rate, it strengthens the US dollars. And number two, is US dollars the strongest currency at this moment? If not, then who? And number three, what are the strategies to counter inflation? And last, we're going to discuss about with higher interest rate, but a lower US dollars. Is this possible and what will be the implication? And before that, disclaimer. So please take some time to read into this disclaimer here. And what we're seeing here is a dollar index, and this is one of the best indicator to measure the strength and the weakness of US dollars. But there is something else where I will explain to you very shortly. But what is a dollar index? It is a measurement of the value of the dollar against a basket of six foreign currencies, and they are euros, Swiss, Japanese yen, Canadian dollars, British pound, and Swedish krona. Now, over the last few decades, it is not just United States. Many nations, they have been increasing their money supply. Another word is maybe another term called QE or whatever term you may call it. Many nations are increasing their money supply, or in short, it is called printing of money. And what is the ill effect of doing that? It will cause each of their currency to be diluted. And the problem with a diluted currency means that your currency will be weakened. And when that happens, inflations follow. And it's no wonder why that we see that it's not just in the United States, but all over the world, we're having this issue of inflation. It's a global inflation that we're seeing here. And what I have to say here is that there's already this undercurrent problem about inflation that's ongoing. And we can blame it on supply chain that caused by COVID-19 and the war the last 2 years. But I can tell you that this supply chain issue is just a switch that turned on the undercurrent problem that has been around all this while. So even the virus is gone, even the war is over, I think it's very difficult to switch back this problem that all of us have created. All the nations and most of the nation have created all this while. Now let's move on to the first part of discussion today and why with high interest rate it strengthens the US dollars. And that will lead us to the rest of the key points to later on. Now, being a Singaporean, of course, naturally I'll be holding uh, in Singapore dollars. But because of the federal, they have increased the US interest rate, it make the saving fixed deposit rate in US dollars really attractive. So what I may do is that to sell my Sing dollars and buy into US dollars and put all this money, the saving that I have into the US dollars fixed saving deposit rate at a high interest rate. And here I will earn a high interest rate. And therefore, when the Fed increases the interest rate, naturally investor will buy into US dollars. That's one example. Therefore, when more people buy into the US dollars strengthen. Now let's discuss about the second key here is US dollars the strongest currency today at this point in time? If not, then who? Now, before we move into this topic, let me just explain to you how a currency pairs work. Now, a currency pairs means that every currency function as a pair. For example, dollar yen. If I'm saying that dollar yen is moving up, meaning what I'm seeing in the future is that US dollars will move up and the yen will come down. But if I'm seeing that dollar yen is coming down, means that in the future, I'm seeing that the dollar will be weakened and the yen will appreciate against the US dollars. Now, let's go to second point here, which is US dollars the strongest currency at this moment? If not, then who? Now, I felt that is gold. Whether it's a COMEX Gold or cash gold, they are the same. Now, gold to me is beyond a commodities. Gold is a currency today. Now, so we're going to study into the relationship between the dollar index and the gold. Okay. Now, we mentioned that a currency is a pair. Just remember that gold, it is also a currency pair against the US dollars. And we could see that in year 2001 as US dollars depreciate down 66% and gold has appreciated up 652%. Now, as the dollar index appreciate somewhere between this period to 2017 by up by 46%, and gold has depreciated exactly down 46% as well. And let's move on to the next slide. And as US dollars kind of range bound, but I would say that it moved down by 20% during this period, and gold has moved up. Now, notice the inverse relationship between the dollar and the gold. Okay, so when US dollars move down, gold goes up 100%. Now, let's move on to the last slide here. As US dollars move up because of the increase in US interest rate, naturally the US dollars move up, and that's what we explained earlier in my point one, that we could see that the gold also depreciate almost the same, about down 21%. But I want you to see the relationship between the two, this pair between the dollar and the gold. Do you realize that whenever the US dollars depreciate, the gold will appreciate even more? This is another example. When dollar depreciate, gold will appreciate even more. When dollar appreciate, gold depreciate about the same magnitude. So this is something, an observation for you to take note of. We'll come back to that again in my subsequent keys. Now, in comparison, and I'm not going to compare about the 1970 for the gold is $35 because I think that will do injustice to the US dollars, because then in 1970 gold was $35. If I'm going to equate that, gold will have rallied few thousand%. I think it's not fair to do that. But after millennium, I think basically all the major economies pick up tremendously. And let's compare between the dollar and the gold. We could see that over this period after millennium, dollar or rather have moved down 32%, but gold has increased by 539%. And I kind of disagreed where a lot of people say that gold is not an inflationary hedge. I think this example have demonstrated that gold is still a good inflationary hedge instrument. I think most of us are looking to short-term, day-to-day operation. But if we look at a bigger picture, we will appreciate gold a little bit more, that indeed gold is a good inflationary hedge instrument or commodities. Now let's look at the next comparison between the US stock market and the gold. And we could see that after millennium, Dow Jones have appreciated by 400% and gold have appreciated by more than 700% that we could see here. And if I'm going to use the current market, gold still appreciate more than the US stock market. Now, let's move on to the third point, the inflation to counter, the strategy or rather to counter this inflation. Now, I think we recognize that from my reading, I do not think that the inflation is going to ease off anytime soon. It seems like the CPI that we know that we're following almost every month that has been staying above the 30s and the 40 years high for many months by now. So it kind of speaks to me that the inflation at the moment is getting out of control, which I do not think it has come down anytime soon. And we did study earlier that gold is a good inflationary hedge. Well, I do not think that it's time to buy gold at this moment, but obviously that we could see that gold is on the uptrend. So in my next tutorial, maybe we'll discuss about this gold uptrend in the long term. But my objective here today is to point to you that as long as we felt that inflation is continuous, I will look for the gold strategy. Gold is a good inflation hedge, first of all. And my strategy will be always look out for an opportunity to buy on dips, not at the moment, but maybe in the near future. So till then, we're going to do watch out for my next video tutorial. We may able to chance upon that. So for those that are interested to purchasing the gold as an inflation hedge, of course, over the long term, you can consider the commodities ETF or fund. Google about them, do some research. But for those who like to trade a little bit on the short term, so what we are seeing here is the COMEX Gold. So basically you could see that every 1 point represents by 100 US dollars, for every 10-point movement, that's about 1,000 US dollars. It's either a plus or a minus. It really depends on the view that you have. It could be profit, it could be losses. But I think for the next video tutorial, I will showcase something that is much lighter called the micro goal. I think that will be much easier to handle for most of us. So if you are into shorter term trading, the live data feed is definitely a must for traders. Now, let's move on to our last key point here, which is it possible that, I'm just going to give you a hypothetical question here, is it possible with the interest rate continue to move up, but is it possible that the US dollars move down? Now, earlier we discussed about when US interest rate is moving up, it will attract investor to buy into US dollars. But what if the situation where the interest rate continue to move up, but the dollars continue to weaken? And that's a real concern because this is something like the pound moment right now, that if US dollars weaken, is going to lead to more inflation for US, and then the Fed will have to raise more interest rates. And then that is a real threat. When US interest rate continue to move up, and what happened when US dollars ease off? And that's a real threat. Now, earlier we studied about the relationship between the US dollars and gold. Now, if that happened, now you may say that it's not possible, but can I say this? I have an attorney friend. I thought that he's very wise. He made a statement. He said that nothing is impossible in life. It is just highly unlikely. Now, there's many scenarios. One of the scenario I can quote you an example is this. Now, what if the rest of the G7 nations or other nations felt that their currency has been weakened so much, they really have to hike rate more than the Fed, more than the US? Now, if that happened, US dollar may face some threat and weaken despite of a high interest rate, and that may be possible. Now, I want to think about when that situation happened, when US dollars weakened. We studied that earlier. When US dollars weakened, what happened to the gold? So for you to think about, for you to ponder over it for the remaining days of this trading weeks that we have. So I have started this inflation series. In the next video tutorial, we'll discuss more on the insight of inflation and rising interest rate. More importantly, how to use this knowledge, turning it to our advantage in these very challenging time for all of us. Continue to explore this topic with these related videos and registered for these webinars as well. Follow my Facebook page for my daily market insights. To be updated with my latest video, subscribe to my channel, and remember to turn on the notification bell. See you again very, very, very soon.